Hey guys, what's going on? So in this lesson, we're starting price action patterns analysis. So this is part 1 out of part 4. So there will be 4 lessons in total talking about price action patterns. And in this one specifically, we will be talking about triangles, such as rising wedges, falling wedges, symmetrical triangles, or ascending triangles, descending triangles, stuff like that. So what are price action patterns? We already looked at candlestick formations and we looked at deceleration when looking at candlestick formations themselves, right? Now, this is price action deceleration, not just candlestick deceleration, but price action deceleration. So these patterns, they typically happen at the end of a trending market. So that's important, right? So it'll be at the end of a bullish trend or at the end of a bearish trend, as an example. And when these patterns happen in the market, they pretty much tell us that, hey, this trend is now slowing down. It is decelerating because of this triangle pattern, as an example. And soon, once it breaks out, we're going to get a new trend, okay? So they're important because using my trading style, you have to determine when a new trend is happening, right? So we use these price action patterns pretty much all the time, every single day or every single week. Whenever we do our analysis, when we make our watch list and make our analysis, that's when we will be utilizing these price action patterns. So they will be incorporated into the strategies themselves as well. So it is extremely important to know them. So with that said, guys, in this one, we will be covering triangle patterns. And in the next one, we will be covering something totally different when it comes to price action patterns. So with that said, guys, let's jump on the charts and I'll show you what I'm talking about. Okay, so when we look at the charts, I'm actually going to start off by drawing out the patterns and then I'll show you the patterns in actual real life charting examples. But for now, let's do some drawing, just like we did with the Elliott wave lesson. So I'll just move this to the side for now, we'll use it later. Let's draw some triangles. So what I want to start off with is wedges. Okay, that's some of the most common triangle patterns that I typically use. So let's start off with that. And there's 2 types of wedges, rising wedges and falling wedges. Okay, so let's draw them all out. Assume this is a bearish trend. Okay, so maybe we had a massive wave 3 run. This is a wave 3 run to the downside. We just looked at Elliott waves, right? Then we could get something like this. I should probably, let me actually go back and draw it up properly. There we go. Okay, now let me draw the arrows, just so it's a little bit more accurate. All right, so that's one type of a falling wedge. Okay, I'm gonna draw the same thing, but to the upside. So let's assume we have a big run up, pull back. Let me just draw it out, maybe a little bit larger. And it continues. And I'll explain this in a second. This can just break down right now. Okay. So what these are, this is, let me put the text below. This is a falling wedge. This will be a rising wedge. I'll actually make the text a little bit larger for you guys. All right, so falling wedge and a rising wedge. So price action patterns, triangle patterns, they are pretty much telling us that there's deceleration in the market when it comes to price action, okay? Previously, we looked at candlestick deceleration, right? When you have like 2 or 3 candles decelerating. This is price action deceleration, okay? So when you see something like this, this means that the bearish momentum and that bearish trend is coming to an end, okay, you're going to see this typically during a wave 5, you know, where a wave 5 is decelerating, okay, and then all of a sudden, boom, you have a breakout and start of a new trend. So this is a falling wedge, and this is a rising wedge. Same thing, just one is at the bottom of a trend, one is at the top of the trend, trending market, okay? So same thing here. This is a rising wedge, means that it's rising to the upside, and then boom, a break to the downside, and continuing with a bearish trend, okay? These patterns, they can also look a little bit different. So if let's assume in this case we have a bullish run to the upside, okay? And then over here, we have something like that. Okay, and let me draw the opposite. Okay, so what we have here, this is a falling wedge. And this is also a rising wedge, okay? So they can happen, a falling wedge is always a bullish signal, okay? So write that down. A falling wedge is always a bullish price action reversal pattern, okay? That's what these are. They are price action reversal patterns. Just like we have candlestick reversals, these are price action reversal patterns. They mean that the market is decelerating and there could be a reversal in the opposite direction, okay? So they are reversal patterns. There's other patterns called continuation patterns, which they are these, okay? So the ones above, when a falling wedge happens at the bottom of a triangle, okay? Let's actually write that down. Reversal, you guys should probably screenshot this for yourself. Reversal pattern and continuation patterns. Okay, right, so reversal patterns, they mean that the market is going to reverse. So such as this, bottom of a trend, bearish trend, and at the bottom of a trend we have a falling wedge, okay? That means the market is going to reverse to the upside. Same thing here, bullish trend, and at the top of a bullish trend, the market is decelerating within a rising wedge. It means the market is going to reverse to the downside, okay? These two are reversal patterns. So falling wedge, rising wedge. Now we can have falling wedge and rising wedges as continuation patterns as well. So such as those ABC pullbacks that we talked about, right? This would be like a wave 5, finishing a wave 5, and then boom, a new trend. This is kind of like a wave 4 continuation pattern. A wave 4 ABC in a way, right? And then a boom, continuation to the upside with a finishing with a wave 5, right? So you're gonna see this a lot within the strategies themselves, right? So something like this, a falling wedge would be an advanced breakout strategy, you know? So we would utilize this on a breakout and take the run up, okay? Same thing here, we would utilize this on a breakdown and take the run down, okay? The wave 1, okay? That's the wave 1, the breakout wave, right? If this doesn't make sense, it will once we start digging into the strategies. This would be my ACB strategy, advanced continuation breakout. It would happen at the end of wave 4 and you're catching the wave 5, right? So we will be looking for these type of patterns. So these patterns are important because we will be keeping an eye out on them almost with every single one of the strategies. Not every single one, but it's typically, like I said, during the wave 5, when the wave 5 is coming to an end, because one of the strategies, the advanced breakout, we need to know that a wave 5 is coming to an end. So you need to be proficient with these type of patterns, okay, to trade the advanced breakout strategy. You need to find them, you need to understand them, okay? And they're simple to understand. It's just a triangle, you know? You would be drawing a triangle within a pattern. So if there's the bearish trend and you see a triangle, you just connect the dots, you know, draw a triangle and boom, you have a falling wedge, okay? And then if you have a falling wedge, again, we'll dig into the strategies to know exactly how to execute it, but that would mean a bullish move. A falling wedge means a bullish reversal. In either case, whether it be a reversal pattern like the two above, or whether they are continuation patterns like the two below, okay? A falling wedge is always a bullish sign, whereas a rising wedge is always a bearish sign. That's all there really is to say to this, okay? I would recommend you guys screenshot that for yourself. Right, and then always keep it as a note, to even take notes and maybe even draw it out. And for homework, I would strongly suggest, because this kind of stuff is something that you have to know, okay, to execute some of the strategies and to properly read price action. So I would highly recommend just jump on the charts when you're back testing, at some point when you'll be back testing, and find the patterns, you know. So with that said, let's have a look at one. Okay, so we looked at some rising wedges and falling wedges, so let's have a look at some examples. And there was a beautiful rising wedge here on CAD yen. Okay, so rising wedges, this one is right here. You know, let's draw it in, connecting the wicks in this case. We had a rising wedge break to the downside. You can also draw it connecting open and close, which in this case is even better, right? So that's why I utilize both options and see which one is better. Again, like I said in the previous lessons, I typically do open and close. So this is a rising wedge, and you see how this is a rising wedge. What kind of pattern? Reversal or continuation? You guys should know it. It's a continuation pattern. So we were in this bearish move to the downside, and then A, B, C. Okay, pull back, reversal candlestick at the top. What is this? Shooting star, bearish high test, right? And then a break to the downside. So this is a rising wedge continuation pattern. So rising wedge is always a bearish reversal, right? So that's an example of a rising wedge. Let's have a quick look at a falling wedge. And I'll take you to Kiwi CAD. Daily chart. I already have it drawn out here, and this is this is a continuation pattern. This is a falling wedge continuation pattern, so this would be utilized a lot during the advanced breakout strategy, right? So we're trending down, 1, 2, big wave 3, wave 4 pullback, and then deceleration on the wave 5, right? We looked at MACD divergence. We have divergence, means at some point the trend will reverse. Then the market is decelerating from this falling triangle, falling wedge, okay? And because this is at the bottom of a trend, it is a reversal pattern to the upside. We had a perfect reversal. You know, you could even take the breakout or take the following strategy, which would be present here, and take the play to the upside right here, right? So again, you'll see this because they're built in within the strategies, but what you need to know here is this falling wedge at the bottom of a trend is a continuation pattern, right? Simple. And there's many examples of this, but I will leave you guys that for homework, okay? You're gonna have to watch this a few times, potentially make sure you kind of draw out those patterns for yourself and then practice. You know, you can only get this by practicing, by looking at the chart and finding it for yourself. That's how you get comfortable with finding these setups, because at this point your eye is not trained to pick up on it, okay? So you need to train your eye, you gotta train your mind, you gotta train your brain to kind of pick up on those patterns. It's the same thing as, you know, when you always want that car, whatever car it is, and then all of a sudden you start seeing it everywhere. It's the same thing. You know, you train your mind to pick up on these type of patterns, and then all of a sudden you're always gonna be seeing them, always. You know, whenever it's happening, boom, you know, here's a falling wedge, here's a rising wedge, you know, here's a descending triangle, which is the next thing we'll look at, okay? So these are examples. This is an example again of a falling wedge. The previous one on the CAD yen, that was an example of a rising wedge, continuation to the downside, whereas the other one was a reversal pattern. Okay, so now let's have a look at a symmetrical triangle, totally different triangle, and I'll already have one planned. And this is a symmetrical triangle. So let me draw it out first. Okay, so symmetrical triangle is a little bit different than wedge. It's still also a type of a wedge, but previously we looked at these rising wedges, right, where they kind of look like that, right? The market is decelerating within the wedge. We also looked at the falling wedge, where the market is decelerating like this, and it's a continuation pattern. What we're going to look at now is a symmetrical triangle, and it looks like this. Sideways. Okay, so symmetrical triangle goes sideways, and it's the same type of idea. The market is decelerating. However, a symmetrical triangle typically is a continuation pattern, meaning that it will continue with the trend. So this is just kind of a pause, a deceleration. It will continue with the trend. However, sometimes it does cause a breakdown. Okay, so I find that this pattern does both things. It's mainly a continuation pattern simply because the market is accelerating to the upside, and then this is just a small pause, deceleration, some consolidation. Maybe there's a little bit of resistance, right? But the market is overall still making higher lows, and boom, breakout to the upside. But at the same time, it's making lower highs, so sometimes it does have a break to the downside. Okay, and an example of this, again, same thing would happen before I show you the example, but same thing would happen in the bearish trend. So you would get your symmetrical triangle would look something like this. Price action would go within it. And it either breaks to the downside, right? Or it breaks to the upside. One or the two. Now, let me actually spell it out for you guys. Right, so it's a symmetrical triangle. That's what this is. And again, mainly, like I said, continuation pattern, but it can be a reversal as well. So you just got to be cautious of that. Now, how does that look in real life? Here it is. So this is current time. We don't know which way it's breaking out just yet, but chances are it might be breaking out to the upside. That's kind of what it looks like. But the month is still new. So this is just the beginning of the new month, and at this point, it looks like we're breaking out to the upside, right? But it could very well reject this at the end of the month and continue lower, but that's what a symmetrical triangle looks like. Now, let's have a look at the next one. So we looked at symmetrical triangle. Now the next thing will be descending triangles. Okay, descending and ascending triangles. A little bit different, not a wedge. And then after this lesson, we are done with triangles. There we go. So something like this is a descending triangle. Okay, let me draw it out first. So descending triangles, they can happen either in a bullish trend or bearish trend. I'll show you both opportunities. And they would look something like this. They would have a flat top. Okay, so if it's in a bullish trend, it will be a flat top. And it looks something like that. Okay, so not really a wedge, a rising wedge or a falling wedge, right? Because it has this flat top. And because it has a flat top, guess what type of pattern this is? It's a breakup to the upside. Why? It means that there's resistance above, but why is it still bullish? This is important. This is one thing why people don't understand, right? You got a flat top, but why is it bullish? Because we are still making higher lows. So the overall trend is still bullish, and this is just decelerating within the triangle, and then boom, we have a breakout to the upside. Okay. However, There are times where, again, because there's still resistance, okay, there is still resistance, I see that it does also break down to the downside, right? So this is one of the patterns that traditionally, when you study it, people will always say it's a bullish breakout, okay? But there will be cases, because again, there is resistance, and if the resistance is strong enough, we will get a break to the downside, okay? And it does happen quite often. So this type of pattern is, again, it's meant to be a continuation, but it could be a reversal pattern as well. And it'll be the same thing from the downside here, you know, so we would have a flat bottom, and the market would overall still be trending downwards, you know, so it would look something like this. And the break lower, but it could also break higher, right? So again, a descending triangle, price action is trending downwards overall. We're still making lower highs, so that is why it's bearish. We're stalling at support, but because we're making these lower highs, triangle is supposed to break down lower. However, if the support is strong enough, it will break out higher. Okay, so something to again keep an eye out on, and I'll show you how to play these kind of triangles within one of the strategies. Again, the advanced breakout strategy, that's where we kind of look for these type of patterns. Otherwise, we're not really going to play it that much, trade it that much, except for the advanced breakout strategy. But again, let me write it out. So this is an ascending triangle, and then this is I can't spell today. There we go. A descending triangle. So ascending, descending. Okay, so let's have a look at the real world and see how this actually plays out. So if we're looking at the real world, here it is. So this is one of those cases that I was saying. It's a descending triangle. It happens at the bottom of a trend, right? So we're getting this descending triangle at the bottom of a trend, but all of a sudden it broke out to the upside. And again, what's present here? MACD divergence. We're flat, the price action is flat, but MACD is bullish. So we have MACD divergence and price action broke out to the upside. And this could be taken as a breakout strategy, right? Or as one of my initial breakout strategies, which would be like that, break and retest, right? So that's how that is played in the real world. It can be taken right here, you know, as a breakout, or once it breaks out, once you get that confirmation, then on the retest with one of the strategies to catch. What wave is this? Wave 3. So that is it for the triangle lessons. We looked at, again, rising wedges, falling wedges, symmetrical triangles, ascending and descending triangles. We looked at them all. We have what kind of patterns? Continuation patterns and reversal patterns, right? So they can happen in both bullish trends and bearish trends, and they are, again, very universal. So review this lesson as many times as you need to truly understand it. But again, for homework, you're gonna have to test this and look for them yourself, you know, so that your eye and your mind is trained to kind of pick up on those patterns. Because initially, if you're never looked at a chart before and don't have much experience with it, you're not going to pick it up. You know, there's a lot of noise there. To me, I just look at a chart and right away I see a triangle, you know. But for you guys, you will need training. You will need to train yourself on spotting these types of patterns. So with that said, guys, I will see you in the next lesson, which we will also be looking at different price action patterns.